Welcome, everyone. My name is Stephen Halasnik, and I'm co-founder and managing partner of Financing Solutions. Financing Solutions is a leading provider of lines of credit to small businesses. Our line of credit program is fast, easy, inexpensive, and costs nothing to set up, making it a great cash backup plan for your business. If you'd like to learn more about our line of credit program, please visit us at fscreditline.com. That's FS as in Financing Solutions, creditline.com, or give us a call at 862-207-4118. Just remember, I say this a lot nowadays, the time to set up a credit line is when you don't need it, because when you do need it, number one, we may not be able to respond quick enough to solve your problem. And number two is you may not be approved again. So it's always a good idea that credit line's purpose is to be there as a backup plan for when you need cash. Today, I am excited to be speaking with Ken Boyd from Accounting Accidentally. Ken Boyd is a 4-time Dummies book author, including Accounting's All-in-One for Dummies, and a frequent contributor at QuickBooks. His blog and YouTube channel links can be found at accountingaccidentally.com, and that will also be in our show notes as well. Ken, welcome to today's Entrepreneur MBA podcast.
Hi, thanks for having me.
So today's topic are 8 financial management strategies to increase profits. And, Ken, when I asked you for your bio, you certainly understated all the things that you've been involved with. I'm just going to let my listeners know that Ken, when it comes to financial management strategies, he's got tons of experience, written 4 books on the subject matter. And he's got another company that he runs as well. And, but it's when you are starting off in business, you sit there and your purpose is grow sales. That's what you think your purpose is, right? It's grow sales. And then I think you have this aha moment where either you can't pay your bills, you're not bringing any money home, all right? You're all of a sudden you're like, oh, it's the profits that matter, and everyone thinks that sales and profits go hand in hand, and they really don't, do they?
No, it's funny, Steve, the story that I was going to tell is similar to what you just described, which is years ago when I did accounting full time, I had a plumbing company, did about $3 million in sales a year. He's a residential plumber, and everybody needs plumbing.
Yeah.
And the guy had a great business. However, he lost a little bit of his cash, his available cash, when he worked on a commercial plumbing job that was outside his expertise. As a result, he was constantly short cash. It was a huge struggle to make payroll. So it makes the point that cash flow for many people is as important or more important than profit, and that he eventually had to sell part of his business to get enough cash to operate. So it is about profit.
Yeah,
and it is not just about gross sales.
It is about profit. And it's not only just profit too. I think, when you get a little more involved in business after you've had some experience, profit margins are a big deal. I think, small businesses just don't know. They try to compete against the big guys, and they don't charge as much. Regardless if they charge more or less with the big guys, they have to understand that you're not going to make it up in volume, and you got to make it up in profit margin, which then affects your bottom line. So, how long did it took me? The thing, just to give our listeners, I'm by nature a sales type of person. So salespeople always think about revenue, sales. Sales. And so, I'm not sure if I listened to people like I did listen to people like Ken. I was lucky enough to be involved with lots of advisors and lectures, and they made me aware of how important profit is. So, today we're going to cover some of those key areas. But just to start off with, it's about the profit you make, not the sales you generate. So I guess there are some occasions where driving revenue is really certainly a good strategy, but not at the expense of sometimes of knowing at least you're doing that to sacrifice it, right?
Yeah, the example I use when I teach profit margin and also sales mix, the mix of the products that you sell, is you can imagine a Home Depot selling a $5 hammer and a $250 lawnmower. It's not just about the sale price, it's about what's the profit, how many cents per dollar are you making on a $5 hammer or a $250 lawnmower, and what is the combination of products you're selling at different profit margins. That's what's really important, and that, especially for beginning business owners, gets lost or ignored.
Yeah, and I think like if I asked any of our listeners right now, what is your gross profit margin? And if you don't know that, just so you know, if I asked 100 business owners that are under 3 million in sales, and I asked them, 99 of them would not know.
No.
So don't think it's like you're a bad business person before that. However, after today's podcast, you need to know what your gross profit margin is. And if you struggle with that, ask your accountant to help you. And then the second thing I would advise before we get into more of what Ken's going to talk about is you should understand what your competitors' gross profit margins are. And I did this really well with a lot of my companies because one of the things I was really unusual with me was that I was not afraid to pick up the phone and speak to my competitors and ask them this question. I mean, keep in mind, my businesses have never been a local business, so I would call somebody up maybe in Texas and say, "Hey, by the way, what's your gross profit margin?" And so we could kind of benchmark a little bit. So Ken, tell us a little bit about some of the things that you would say can greatly help, with the financial management strategies to increase profits.
Um, we've already touched on cash flow, but there's some things I wanted to touch on, some action points when it comes to cash flow. And the first is to project what I would call, from an accounting standpoint, a cash flow roll forward, which is beginning balance each month, add your cash inflows you expect, subtract cash outflows, payroll, inventory, etc. And you're going to get your ending balance for, let's say, January, which becomes your beginning balance for February.
Hmm.
And to the best that you can, forecast that out forward and each month update it. It's time consuming. A lot of people don't do it. It's a little bit of guesswork, but that's really important to do.
Hmm.
And the second thing is, you really, and you talked about learning in your business. I had to learn this in my business. You really have to you have to charge more, and you have to ask people for payment. And you have to formalize the collection process so that if somebody owes me money, after X number of days, I'm going to email them, maybe another invoice out of PayPal or wherever you invoice. And after X amount of days, I'm going to call them. I really had to learn that in my case. And it also shows a degree of professionalism, the fact that you're a professional, you provide a great product or service, you're following up. Anybody who's a client shouldn't be surprised that you're following up about payment. So formalizing that collection process is critical.
Yeah, I had this one company. It got to about 7 million, and it was at we were on the Inc. 500 fastest growing companies in the United States, and so our receivables at the time were at 66 days, and it really was causing some problems, and not only caused a problem, but I wasn't happy. We were growing in leaps and bounds. So we were growing at 50% year over year.
Wow.
So it was like big growth. I think we had gone from 1 million to 3 million to 5 million to 7 million in those 4 years, whatever it was. It was more than that, so more than 50%. But so what happened was, just for our listeners, I mean, this was a good thing. I sat down with my bookkeeper and I said, okay, let's brainstorm this. Our target is we want to get down to 45 days because our terms were typically 30 days, right? And so we came up with all these action plans, and they were so simple, like you were saying, Ken, that like one of them was make sure the invoice is going to the right person, right? Make sure we had that person's name. Is that same person the one that approves the invoice? Is that same person the person who knows the status of when a invoice is supposed to get paid? So what we would do at the 20-day mark, our bookkeeper would call that person and say, I just want to make sure that invoice X3455, whatever it was, is scheduled to be paid on this date. And the person would say yes or no or whatever. And I agree with you, Ken. Like, it was considered to be professional to do stuff like that.
Right.
It made us look good as a company.
Yes.
And
Yes.
and our and then if something went past 45 days, then my bookkeeper would notify me, and then I might notify our client, that either I or our salespeople had contacts with, and said, hey, I mean, we didn't do that all the time, but we were able to get our invoicing down from 66 days to 45 days. And that, and from that point forward, it always stayed at that point at 45 days, which is definitely acceptable. And the reason why it was 45 days was, honestly, we had a few clients that I was contractually obligated to pay, that they were able to pay us at 60 days. So, we were able to get it as down as we possibly could. And so that's good advice, I think, Ken, for saying that you got to be on top of your AR. So.
And one other thing I'll mention on that is that there is now software available to automate that invoicing process. So once you collect that data about who the contact is, what's their email address, et cetera, you've got it. You've got it in a system. When you send the invoice, it goes to the right person. I personally invoice through PayPal, but you can get QuickBooks, and a lot of other systems have an automated invoicing system, which takes out a lot of the risk of error.
Yeah. Are you finding that are you finding that, I'm not in the business, well, I'm not really in that type of space right now on any of my companies, but are you finding that businesses are moving to electronically payment? Are they still cutting checks?
When I think about my clients, people I write for, and businesses that I write about, everybody is automating.
Yeah.
I would bet, I don't know. I don't know of the people I'm thinking of, 5% of their receivables are paid by check.
Mm.
It's 95% in my experience, people paying electronically through a PayPal invoice or some other automation. Very few
I
checks.
know businesses that are, I had a friend who had a business that did home automation, right? Installing TVs and installing big, huge sound systems and those type of things. And he had a problem with his AR. And we just said to him, I said, tell your clients up front that everything's got to be paid by credit card, and you collect the credit card information up front and let them know that you're going to be, you're going to have to pay for this when the services are vendored, and I'm just going to charge your credit card. His AR problem completely went away.
Right.
And his clients saw that as a normal business practice.
Yes. In essence, what you're doing is you're training your client to behave in a way that's reasonable that helps your business.
Yeah. Good. What's next on your list?
I wanted to go back. This may be, I don't think this is off track, but if you're in a business, start with the why. In other words, if we are increasing profits, why is that? I do a lot of writing in the business broker space. I handle the blog for one of the largest business brokers, and so I write about business sales a lot. So it's, are you starting a business just to earn more income as an owner? Or are you starting a business to build a more valuable asset that you want to sell? And this may be 5, 10 years down the road or whatever, but I think it's worth having that conversation to decide why it is that I'm headed in a certain direction to drive more profit. And, and you as a business owner knows, maybe you sell a business as a multiple of annual revenue and as a multiple of earnings, whatever. But I think it's worth having that conversation at the beginning or right now if anybody's listening and has a business.
Yeah, it's tough. I mean, I've had 6 companies, right? And I haven't really sold any of them, right? I had one that I kind of sold, but it was for a small amount of money. They were all, they're what we would call quality of life businesses. And there was always something about them. I think I have one right now because I have 3 businesses. I have one right now that's sellable. And the issue you have when you say to yourself, is my business sellable? Is there's a lot of other discussions that goes into that about, can another person come in and run this business?
Yeah.
Which is a big discussion. I think, sometimes you just get in these businesses that are just going to be very challenging to sell,
Yes.
and it is what it is, right? And I've been doing this a long time, over 25 years, and listen, the smart way of building a business is to say, I'm going to build this business so it's sellable, because you want an exit, right? Um, and I think sometimes you can do that. I think you can sometimes change the business around so that you have a sellable entity, but it's challenging sometimes. Would you kind of agree with that?
Very challenging. And you nailed it. It's, can the business operate without the owner? If the owner's the brand, if all the clients are there just because of the owner, it becomes very hard to sell. Um, and I write about that all the time. But to go a step further in terms of, okay, well, what is value? It would be consistent earnings, the ability to generate repeat business, a diversified customer base where you're not too dependent on one or a handful of customers, brand awareness, and can you operate without the owner? Um, I can't tell you the number of businesses that I've come across, worked with, written about that are not sellable because it's completely dependent on the owner. Even big companies, 10
Yeah.
million and up, and they're just not sellable.
Wow.
Yeah, it's
Yeah.
really, and it's heartbreaking
The
to see.
Yeah, it's funny, in the objective of the Entrepreneur MBA, the podcast, and when I do a YouTube channel and stuff like that, I say the objective is to help business owners grow their business past the $10 million mark. And the reason being is what I had learned in the businesses, at least the 2 of the businesses I had been in at, it what in every industry is different, but at that $10 million mark, that's when people were interested in buying
Right.
businesses. It's kind of because, and the reason for that is something you mentioned. At 10 million, that's when you have to have all your processes in place. The owner can't be doing all the work. It happens earlier than that. Depends on the business, but so you really got to be, growing your business. If you're not going to, again, it depends on the business. Like at 3 million or 5 million, a plumber is a good size, probably business. I had 2 staffing companies that were, one was a 7 million, one was 5 million, but people really weren't interested until I got the 10 million mark,
Mm-hmm.
and so size matters. And so I agree with you if that's your objective to drive, but just keep in mind, they're going to be looking at profits too.
Yes.
So, right.
Ultimately, yes. Yeah.
Yeah.
And I don't know what you've seen, Steve, but I think with because I'm in the writing world with coronavirus, there has been so much innovation and so many business pivots in order for businesses to survive that we've really seen some business owners make dramatic changes to their businesses, and they're going to be better off moving forward.
Yeah.
And I've read dozens of examples of that. And I think that the pandemic forced everybody to stress test their businesses, and the people who made the changes are going to be better off.
Yeah, it's not let's be clear, it's not the pandemic, it's the recession. Okay.
Mhm.
And, I had a really good mentor, and he was, sometimes you just don't get it, right? Sometimes you have to experience something before you say, oh, that's what they were trying to teach me, right? And
Right.
he would sit there with his pad, right? And I met with him every quarter for 20 years. Smartest business guy I ever met, next to Ken, of course, but smartest business I ever met. And he would show me that every 10 years, a major recession happens in the United States.
Huh.
And at that point is when it just wreaks havoc on businesses. So, like, I lived through the 2001 recession because 9/11. Okay. I will live through it. That's a different word. 2008 recession,
Mhm.
and now we're in the 2020 recession. So why am I saying this, to add on to what Ken's talking about too, is every 10 years you had better be prepared for what you're going to do in a recession. What's not, now when the 2020 recession hit, my companies, I have a business partner, and he's very experienced too. He and I talked about what we would be doing during a recession 4 years ago, 5 years ago. We said, okay, when the recession hits, this is what we're going to do. And we acted so fast this time when the recession hit. We saved ourselves a lot of money,
Uh-huh.
and we knew exactly what to do. We weren't unprepared. So, what I'm saying to our listeners out here is, you know, learn from this one, because there's going to be another one. And, now you kind of learned. And if you listen, some businesses did well during this time,
Yes,
but maybe next time you won't.
exactly.
So, just be prepared.
Yeah, that's great advice. And what you just described is something that virtually no one does. Virtually no one.
Yeah, well, try getting beat up in some of the recessions, and you learn it pretty well. I mean, I tell this story. I'll say it quickly. My offices, in 2001, I had a really good company. No, this was the 2008. I'm sorry, 2008. I had a company, Inc. 500 fastest growing company, 7 million at revenue, on our track to do 10 million. My offices are on this top of this hill, 5 stories, and you can see the World Trade Towers in the distance, right?
Wow. Uh-huh.
Uh, yeah, that's right. It was 2001. I'm sorry. And when the World Trade Towers fell, which we saw in the distance,
Oh,
I knew that my industry was over with, that I was in. But at that time, I had mentally prepared myself years ago, because I knew I was in this industry that was, feast or famine, so to speak.
okay.
It was going to go up and it was going to go down. And I knew once the 9/11 towers, when it went down, that it was going to be bad. And I laid off 95% of my staff within a month. So,
Wow.
and yeah, so anyway, and there's other stories that I like that. But if you've been through a recession, you know what it's going to be like,
Right.
and you're smarter about it, I think. So anyway,
Right.
what's
Right.
next?
Three customer metrics. We all have so much data, and there's so much that we could pay attention to that technology sends us, but there are three metrics some of which, not all three may apply to the people on the listening, but one is customer lifetime value, which is the maximum dollars you think is an estimate a customer can earn over time, that you can earn over time. So, for example, I have a car today at my repair shop. I've gone there for 15 years. A repair shop's a good example of huge repeat business and a lot of lifetime value. The second would be customer acquisition costs, which is simply how much are you spending on marketing and sales versus how many customers are you getting in the door for a particular period of time. It's a big, in technology, particularly e-commerce, customer acquisition cost is big. And then finally, monthly recurring revenue. And in this case, you can think about subscriptions as an example. How much money can you reliably expect to earn each month from repeat business? And those three metrics, if you can use any of those or all of them, are pretty valuable.
Well, that's good stuff. I tell you, I feel like if someone were to do all these steps that you just talked about, you got a pretty good business there.
Yeah.
You're a pretty good, because let me go back to the thing, like what I said, if you don't know your gross profit margins off the top of your head, then you really got to really know that. But if you don't know how much it costs you to acquire a client, then you got to know that figure. And I do, like I know from my business, and then what you make off of each client. And it can get really sophisticated here because you can say off which channel. So in other words, marketing channel I'm talking about. So when you run ads on Facebook, how much does those clients, I'm just, whatever channel, if you run your ads on Facebook and you get a client that way, how much does it cost you and how much do you make off that client? If you do direct mail, what's that channel? That really, you really have a pulse on your business if you can understand those things. And the lot of the listeners today have smaller businesses. They might only have one channel, which might be salespeople, right? But you probably still should understand your client acquisition. What does it cost you for that salesperson? And you can probably maybe work back into it. What was that third one that you had on there? It was
monthly recurring revenue.
So explain that one a little more. I mean, suppose someone doesn't have a monthly recurring revenue. Suppose like they do a job for a client and that's it. It's kind of done.
Yeah, I would say that monthly recurring revenue is really limited to businesses that have a subscription model. So in other words, in my repair shop example, he's got people that are coming back every few months. I would not count that as monthly recurring revenue. What I'm thinking about is who is paying you on a monthly basis. A good example is a landscaping company I'm aware of has contracts with businesses where they go in and they service not only the landscaping, but all the watering systems in the ground. That is on a monthly subscription. So I would only limit monthly recurring revenue to monthly subscription.
And I think, would you agree that it's always a better idea to have a monthly reoccurring subscription model than clients that pay a larger amount one time?
Absolutely. I can tell you in my case, as a person who most of my income comes from bigger projects, whether it's books, I write a lot of test content. Most of my projects are big chunks, and I have tried for years to figure out more of a subscription model. I get a little bit of that, but not very much. So you're much better off on a subscription model. It's less of a headache.
Yeah.
You don't have to worry about collections. And you also, the problem with big projects or bigger clients is things can go wrong, you can get delayed. So in terms of time management and being productive, that's also a risk.
Good. What's next on your list?
I think that improving customer service. People's expectations with customer service are getting much higher as technology grows. There was a quote I used two quotes that I used in pieces I wrote recently. From Garnett, 64% of people think the customer experience is more important than price, which I thought was interesting. And American Express does a customer service survey every year, and they said recently that more than half of people have stopped a planned purchase because of poor customer service. The way to figure this out is to walk through your customer's experience of dealing with your business and to see how smooth that is, for lack of a better word. Um, Here's a good example with the pandemic going on. I'm sure all of us have ordered food through a restaurant that we like, and the big thing for me is how easy is the mobile app to use? Because if they have a mobile app where I can order food and pay for it that way rather than calling, I'd much
Yeah.
rather do that. So that's an example of a customer experience. So I think that's customer experience is a bigger and bigger issue because your competition is going to use technology and they're going to make the customer experience better, and you simply have to keep up.
Yeah, I think, one of the ways that you could even do that in reverse, and that you would say is, how could I, if I don't know, how would I word this? How could I increase my prices, and by doing that, increase the services I'm providing?
Uh huh.
Right. So instead of like saying, okay, well, I want to do great with customer service, and I want to do a really good job with them. And then you think of that as just the normal course of running your business.
Uh-huh.
Uh, Instead, increase your customer satisfaction, but charge more because of that. I think the
Yeah.
key for all small businesses is that they have to learn how to increase their prices.
Yes.
And the other thing about this, business to business, or if you're in a B2B space or you're in a B2G space, business to government, I don't think people are that uh, uh, concerned about price.
Yes.
I think it's a lot less than you think.
I
Um,
absolutely agree.
right. In the B2C space, yeah. Okay. But again, go back to the idea, as a small business, you are never going to compete on price.
Right.
So just be the best at service, right? Be the best at
Yeah.
service, and you can charge more, and clients are going to stay with you longer because, or whatever, they're going to work with you more because it's kind of the best thing. Just say, you know what, I'm going to be the highest priced person in my space. You know?
Yeah, I'll give you an example. The one of my former editors at QuickBooks started essentially an agency, a marketing agency, and he went for the top of the market. And his message is, look, I'm an expert. I'm going to give a great experience and also great expertise. Therefore, almost like a concierge business. And he charges high prices. He started a business uh, about 9 months ago, and he's killing it because he decided on a niche and he stuck with it.
Yeah.
And he's doing great, but because he's very clear about the service that he provides, and that he
Yeah.
communicates that this is a high-end, niche-specific service, and people are willing to pay for it. And he
Yeah.
doesn't get pushback.
Yeah, I'll give you another scenario, which was, I see this happening a lot. So my sister had started this is a long time ago. My sister had started. We had both kind of started businesses at the same time that were kind of in the same space. We weren't really competitors, but we each our own business. And my sister she had the attitude where she would, if she was making $1, like, I don't want to try to streamline this, but if she was let's say she had a product that was selling for $50. If she could sell it at 51 and make the sale, she would do it because she got that extra dollar.
Uh-huh.
And I was like, I'm not going to do it because, I have to have more internal things to produce that product that you're talking about. And I have to make a certain gross profit in order for it to make it worth my time
Right.
and our company, because there's all these other fixed costs that go into a company that you don't put into your product sales price, so to
Right.
speak. So I would walk away from it. I'd say, no, if I'm not going to get $15 out of this $50 service, if I'm not going to get $15 in gross profit, I'm not doing it.
Right.
And she would do it at $1. I'm exaggerating, right? And she got her company to be $30 million. I got mine to be at 7 million, but she was making less profit than I was. Growth net profit at a
Right.
$30 million company. And, that doesn't make any sense. So, yeah. So I was, you have to be, what's the right, disciplined
Yes,
in
discipline.
saying, listen, this is the price, or I'm going to charge more. And that's what it is. If I'm not going to do it, I'm going to walk away from it. And I think that really has helped me in my career.
Yeah, I got to tell you, in my case, I've turned down more work in the last 3 years than I ever have, based on either price or the what I suspected was going to be a difficulty with the client.
Yeah.
I've never been better off financially in terms of my work productivity, headaches. I completely agree.
Yeah, there was an old adage years ago that was, fire your clients,
Yes.
right? Right. If you have certain clients that are just a real problem, causing lots of problems, if you have certain clients that the margins aren't any good at, you go back to them and you say, at least the ones the case the margins are no good, you go back to them and say, listen, I appreciate your business, but we're just not charging enough, and we gotta, you know, do this, and gotta be willing to walk away from that type
Yes.
of business, right? Um, so what's next on your list?
A financial dashboard, which sort of relates to the customer metrics, which is, again, there's tons of data out there, and everybody has to decide on the most important metrics for your business. And one that I'll throw out is operating income versus non-operating income, which is a focus on what do you do day to day through your daily operations, that is operating income, and that has to be the focus of your business. So if you're manufacturing furniture, that's operating income from selling furniture. If you happen to sell a piece of equipment for a gain, that's non-operating income. It's infrequent. You can't rely on it. So one of the metrics would be, in one way or another, operating income is a metric. But
Yeah,
I am increasingly
yeah.
concerned with technology that business owners are overwhelmed. They're looking at too much data. QuickBooks is my biggest client. QuickBooks can throw hundreds of metrics, reports, customized reports at you, and you have to know what to look at. And that is
Yeah,
huge.
yeah. I do something that I think is really good, and I I use something, I use, it's called key performance indicators, right?
Yes,
But you're
KPIs.
right. Like with QuickBooks, right? You can get to KPIs, right? So you can get to anything that you want in QuickBooks, but then you have to remember to run it, right? And
Yes.
so, at the end of every month, if you have a bookkeeper, that you can say to that person, listen, these are the 8 things that I want you, and I always put it on an Excel spreadsheet. And I'd say is these are the 8 or 10 or 15 things that I really care about. And every month I want you to fill this out. And if you don't have a bookkeeper, then do it yourself. Go into QuickBooks, run a report and say, okay, what was my sales for this month? Okay, run a report. Okay, what was my gross profit for the month? Okay, what was my net profit for a month? Okay, how much our AR is outstanding right now? You know, all these, anything that you think, and don't overdo it. Just keep it. And what I would do is keep it on an Excel spreadsheet. And then what I also did was I would use a different tab for every year so that I can go back and see a history. Say, oh, where was I 3 years ago? So if I had a really bad month and I look at it and I say, oh, $18,000 in revenue and that's it, in profit. Okay. When did I last do that? And you go back and you say, oh, well, I did that here. Right. And the formulas can also be a little more complicated. It doesn't have to just be something that you pull out of QuickBooks. It might be a formula that you put together that really helps you understand your business. But those are the things that, like, the business owner, and it's called, like you said, a dashboard, right? Because it's like you're on your car. It's
Exactly.
all the most important things. And I agree with you. That's really a key ingredient. And then the other thing about that too is if you have people in your organization that you maybe you want them on the same page as you, that's information that you can share with them as well. And so everybody's talking the same language. Like if you wanted to bring your cost of goods down, and everybody's focusing in on that, or response time for clients or new business, stuff like that. So good KPIs on your dashboard. Good stuff. So what number are we up to right now?
I think I've covered 5.
Okay.
4 or
go
5.
To go to the next one.
Okay. This is tough, I think, for small business owners to find time to do this, and that is improving customer relationships, not just measuring, but improving, which could be promotions, including pricing using bundling. So if you sell sporting goods, you sell bats and baseball gloves together.
Yep.
Rewards to customers, including discounts. And again, you can use social media and technology for that. Gathering testimonials. I think testimonials is growing as an effective way to communicate with prospects and draw prospects in and convert them into clients. And finally, surveys. Technology has made it really easy to survey clients. So if your listeners could pick out a few of those, don't do them all at once, that would strengthen relationships with customers.
Good stuff. Good. All right, next one.
Okay. This relates to our cash flow discussion, which was earlier, but the question is, how much money do you have tied up in inventory and accounts receivable? We've talked about receivables already, but inventory, people really need to take a hard look at inventory. Do you have inventory that's obsolete? How much inventory, if you carry inventory, do you really need at the beginning of the month to meet sales of people right at the beginning of the month before you order again? Because particularly if you're a retailer or a wholesaler, you've got lots of money tied up in inventory. And my concern is that people they've got a number in mind of inventory that they're carrying based on sales, but they're not taking a hard look at it. And they may have too much invested in inventory.
And not properly accounting for it.
Right.
Yeah.
Right.
Yeah. Yeah. Okay, next one.
We've touched on this, outsourcing. That is either hiring a third party to help you do a task or automating it. I'm a big believer in either outsourcing or automating payroll, which, for example, I have a friend who just sold a home healthcare company. Payroll was a big issue. He had lots of turnover with staff. Everybody worked different hours at different clients. Payroll was a huge headache. To the extent that you can automate it or outsource it, I think that's an advantage, and it's cost effective to do these days as time goes on with technology. And the last thing I'll mention, Steve, is segregation of duties, which is an accounting term, but essentially putting controls in place to prevent theft in your business of either cash or assets. And assets could be inventory, equipment. Um, in the accounting world, if you think about cash, there's three types of duties that if your company's big enough, that you need to segregate. And in accounting, we talk about, let's think about cash, the checkbook. Somebody has custody of the asset. So somebody has the company checkbook. Let's say it's the administrative assistant. Somebody has authority to sign the check, and somebody does the record keeping, which is the bank reconciliation. Ideally, perfect world, if you can keep those three things separate, you're going to prevent a lot of fraud and theft. And I have seen it. I was in public accounting 100 years ago for KPMG, and I saw this type of fraud go on, and I was on the audit side with companies that were fairly large. This was not just small companies that had this kind of fraud, fairly large companies. So that is always my biggest concern for business owners, is controls in place to prevent fraud and theft.
Yeah, I think we all underestimate how prevalent it is for
Yes.
fraud. And going back to your payroll too, I agree with you that it should be outsourced. But I'll give you just our listeners a story. The first thing you just should know is, if you are working with a payroll company, you should just require them to send you a receipt when the tax bill has been paid. Because I'll tell you what happened with me is I got lucky, but I was working with a payroll company. The guy, was taking our money. Well, he was, we thought we were doing everything right, paying payroll, giving the money for taxes, only to find out he did not pay the taxes.
Uh,
And just so you know, just so you know, I was still on the hook from the IRS
yes.
because I am the one responsible for that. So what this guy was doing, he was into drugs. He got it all involved in cocaine and stuff like that. So what ended up happening, my bookkeeper, we were lucky, and we were we found out quickly, because the prosecutor from New York State called us up. We didn't lose any money because he had given us the first year free in services. And so we didn't lose any money. And then my bookkeeper had to go to court to prosecute, for the prosecutor to be a witness. And we found out that he had got involved in cocaine. He embezzled $1 million. Right. Yeah. So from that point forward, I continued to use a payroll company, but I said to them, for now on, when you make your deposit, or when you transfer the money to the IRS, we want a receipt of that. And that was fine from that point forward. So yeah. So I think you just need to look at your organization and say, where could I have some issues here? Maybe speak to your accountant and say, hey, where is there fraud potential here? What do you think? Yeah, it's good stuff, Ken. Let me tell you, if my listeners, if you just implemented, all these things that Ken are talking about, you're going to be doing a lot better. So all these are all really, Ken's got some snow on his roof, right? I have some snow on my roof. Okay, we have snow on our roof, and our hairs are gray because we've dealt with these problems.
Yes.
We're not smart. We just have dealt with these problems, right?
So it's perfect. Yes.
Yeah.
So true.
Yeah. So Ken, thanks for coming on today. Ken, how can you help our listeners?
Well, if you go to accountingaccidentally.com, you'll see on the center page a button. I have a site called Conference Room, and the purpose of that site is to create a community on personal finance and accounting topics. And one of the things I do through Conference Room is I do an Ask Me Anything that I just started doing, where I just take questions on any topic for an hour through a live chat. It's every other Friday. So that I think is the door opener, because that's the one thing that people need that they can't get, which is, well, what about my specific question? So that's why I started doing an Ask Me Anything. So you can find a button on my homepage and access that.
But other than the books, how do you make your money? Are you a CPA? Are you an accountant? How do you kind of make a living?
So I make a living through about 80% is writing. So I write QuickBooks. I have some large projects. I write test questions, answers, essay questions for the CPA exam and also for the CMA exam, which is a weird niche that I've gotten into.
Yeah.
So between that, so I basically write business content and then I do a lot of test prep work. Lambers is one of the old CPA test prep companies. I maintain their database of questions and I get royalties from them. And then I do a little bit of video work occasionally, but most of it's writing. Most of my day is writing.
Yeah, yeah. Cool. Oh, good for you. Good stuff. So I'd like to thank Ken Boyd from Accounting Accidentally for coming on today's podcast. If you like today's podcast, please feel free to share it with a friend. And also subscribe on your favorite podcasting app. And of course, if you're looking for a line of credit for your business, you can call us at 862-207-4118 or visit our website at fscreditline.com. Ken, if anyone needs to get in touch with you, I know they can reach you at your website, accountingaccidentally.com. Any way else?
That's really the best way to do it. All my links are on that page, so that's sort of a one-stop shop.
Great. And if our listeners are interested in getting any new business ideas, we shared a lot of them today. I tweet daily about lessons for business owners at Halasnik, Halasnik. And I just want to thank everybody for listening today. Just remember that you always have to be working on your business, not always in your business. You have to be working on your business. And Ken shared with us some really great tips about how to improve profits. And if you can just do one of them every single month, within a year, your organization will be a lot more profitable, which is what we're all looking for. So everybody have a fantastic day, stay safe, and enjoy the warmer weather.